Good morning, students. So we completed the accounting equation chapter and finished the problems relating to the accounting equations. Hope that you are thorough in that accounting equations chapter. Okay. So today we are going to start the next chapter, that is the double entry system, the rules for the debit and credit. Okay, so in this chapter we are going to study about the meaning of double entry system, what are the principles and characteristics of double entry system, what are the rules for debiting and crediting the accounts, and classification of accounts, that is the personal accounts and impersonal accounts, and important advantages and disadvantages of double entry system. Okay, this is a very basic chapter, only having a thorough knowledge of double entry system, because in all the chapters this rules we are going to apply this rules of debiting and crediting the accounts. So be thorough in this chapter. For all type of accounting, this is the basic rules for debiting and crediting, and the important you have to know the knowledge of debit accounts and credit accounts, assets, liabilities, what are the items coming under the assets and liabilities, what are the items coming under the incomes or revenues, and what are the items coming under the expenses, and whether if it is there is a opening balance, you have to know what type of account is it, and if it is an asset is a debit balance, so the opening balance would be come in the debit side. Like this, there is a separate rules for all the debit and credit accounts. Okay, so double entry system is the basic chapter for all type of accounts, whether you are going for the higher studies and for the next 12th standard or higher studies. This double entry system is the basic for all type of accounts. Okay, so be thorough in this double entry system. Okay, so first we are going to study about the meaning of the double entry system. Okay, so in double entry, the name itself it indicates there is two aspects. I already explained that there is two aspects of accounting transactions. In each type of accounting transactions, it involves two type of aspects. One is the debit aspect and there is a credit. And the basic rule is for every debit there is an equal and corresponding credit. So in each type of transactions, it includes two type of accounts. Okay. So but there in some cases there may be two debit and one credit, and one debit and two credit as per the transactions, but definitely there will be two type of accounts, that is a debit account and the credit account. So it is called as a double entry system of bookkeeping, and it is termed as the debit two aspects. It includes two aspects, debit aspect and credit aspects. Okay, so one aspect will be the receiving aspect or incoming aspect. So debit aspect is also called as the, okay, it also be called as receiving aspect or incoming aspect. So receiving means definitely there will be a income, no, or incoming aspect, or and also the expenses and loss is also the debit balance. Okay, so receiving aspect, it can all debit aspect is also called as the receiving aspect or incoming aspect or expenses or loss aspect. So it is called as the debit aspect. So what is the meaning for that? So debit balance, so the debit aspect indicates it may be in the form of asset, or it may be in the form of any income which is received from any type of activity, or it may be any type of expenses which is paid to the outsiders from the business concern, or if there is any loss on the sale of an asset. Okay, so if this type of activities is happening in any type of transactions, it indicates the debit aspect. So next one is the credit aspect. So the reverse, here there may be, if a credit aspect is also called as the giving aspect. There it is a receiving, here it is a giving aspect. or incoming aspect is in debit. So here outgoing aspect, and in debit it indicates the expenses and losses aspect, but here it indicates income or gain aspect. Okay, so it is called as a credit aspect. It's a very important point. Okay, so these two aspects called as the debit aspect and the credit aspect on the basis of the double entry system of bookkeeping. Okay, so the basic principle of the system. What is the basic principle of a double entry system? For every debit there is a equal and corresponding credit. Okay, so it is also called as a two-fold effect of benefit, that is the giving and benefit receiving aspect. It is also called as the benefit giving and benefit receiving aspect. So that is it is on the basis of these aspects. Double entry is an accounting system that records the effect of the transaction. That we studied in the accounting equation. No, we studied all the what is the effect of each accounting transactions. Okay, and other events in at least two accounts with equal amount of debit and credit. Okay, and next one is the important definition of double entry system. There is a two type of definitions. Okay, so for every business transaction it has a two-fold system effect, and it does that it affects the and affects two accounts in opposite directions, and if a complete record was to be made of each type of transactions, it would be necessary to debit one account and credit the another account. This is the definition of the double entry system of bookkeeping. So it is thus a recording of two-fold effect of every transactions. So for each transaction there is a two-fold effect and has given rise to the term of this, so it is called as a double entry. Okay, so next one is the important principles or characteristics of double entry system. First one is every business transaction affects the minimum two accounts. It is the main important. The minimum affects minimum two accounts. Minimum. Okay, understood? So under the double entry system, every business transaction has the two-fold effect of business transactions, and one account is debited and another one is credited. Okay, so next one is recording of both personal and impersonal aspect. So we are going to study what is personal and impersonal, and for every transactions there is a personal and impersonal aspects. So both personal and impersonal aspects are recorded in each transactions. So both the personal and impersonal aspects may be it may be a personal account or impersonal, and other what is the personal account, another one is the impersonal account, and we are going to study how to identify the personal and impersonal accounts. Okay, so next one is recording of transaction as per the certain rules and regulations. So there are certain rules for recording the transaction. So only on the basis of these rules and regulations, the respective accounts are to be debited and credited. And we are going to study the rules and regulations, how to debit the accounts and how to credit the accounts. Next one is the preparation of the trial balance. So what is the trial balance? The next next 2 or 3 chapters we will going to study what is a trial balance. So the preparation of trial balance, the double entry system is the basic and is the base for all type of accounts. So all the debits is always to be equal to total of the total debit balance should be equal to the total credit balance. Okay, so in the trial balance, 3 columns will be there: particulars, debit balance, and credit balance. Okay, so we will write the each transactions, and we will write the debit balance and the credit balance. And after writing all the transactions, if you are adding the debit side and the credit side, both account balance should be equal. This is the trial balance. So this is very helpful in checking the arithmetical accuracy of the accounting records. So this accuracy is achieved only by preparing the trial balance. Okay, so later we will study thoroughly about the trial balance, how the trial balance prepared. That is trial balance prepared. First step is journal entries, and from the journal entries we will post the entries into the ledger, and we will take for each ledger accounts we will prepare the ledger accounts, and in each ledger accounts we will take the closing balance. So the closing balance amount will be transferred to the trial balance. This is the base. Okay, so next one is the rules for debiting and crediting. Next we are going to study about the rules. What are all the important rules of debiting and crediting? Okay, so first we have to know what is the way account. Account is record of all the transactions, recording of all the business transactions relating to the particular person or asset or liability or expenses. So all the, that is business transactions mainly relating to the, it may be the person or asset or liability or expenses or income. We already studied, no? So in accounting there is a separate record for each, there is separate record for each individual assets or liability, expenses or income. Okay, so all the accounts are divided into two sides. Okay, so the left hand side of an account is called, if you take the accounts note, the left hand side is called as the debit side and the right hand side of an account is called as the credit side. Okay, so it is called debit, we are putting DR, and credit we will written as a CR. Okay, so the transaction, for example, if a transaction related to the cash or recorded is an account, enter cash account. Okay, so account is the ledger record in a summarized form. So we will study later how we are going to post the entries into the ledger accounts. Okay, so now we are going to, that is what are the important features of an account. So the next one is the accounts are maintained only with the basic objective to record the transactions for each individual persons. It may be individual person or an asset or a liability, or if it is a revenue or expenses, there is a separate account. Okay, so we will summarize all the transactions related to the head. As per the head we will summarize all the transactions. Okay, so it is a well organized statement, and it is one of the it is one of the format of an account. So see that there is a two sides, no, debit side and credit side. And debit side, date of the transactions, name of other account involved, page, it is JF. JF means junior folio. Okay, JF is indicates the, so the page number. So junior folio is a page number of the subsidiary books. Subsidiary books means later we will study. Subsidiary books, the purchase book, cash book, purchase return, sales return, some of the bills receivable book, bills payable book, assets book. Like this, there are a lot of books, and all the books are combinedly called as a subsidiary books. Okay, and the amount of the each transaction. This is the debit side, and in the credit side, the same one. Date of the transaction, name of the other account involved in the transactions, page number, that is junior folio, and last one is the amount of the transaction. Okay, so this is the format of the account, how to maintain the account. Okay, so there is the two types of approaches in the accounts. Okay, so under the approaches, the accounts are classified as the traditional approach. There is a two types of approach, traditional approach and the accounting equation approach. We already studied, no? So the classification of accounts in the traditional approach, it's divided into three categories, which is the transaction which is relating to the individuals and firms, transaction related to the properties, goods or cash, and transactions which is relating to the expenses or losses, and incomes or gains. Okay, so the transactions can be classified into three categories, that is individuals and firms in first category, second one is the goods or cash, and third one is the expenses or losses, and incomes or gains. It's a traditional approach. Okay, next one is, so the accounts may be classified into two type of accounts. One is the personal account, another is the impersonal account. So the personal account, there is a three types: natural, artificial, and representative. And impersonal, it is divided into two types: a real account and nominal account. So in the real account, that is, it is subdivided into tangible and intangible. Okay, here see that types of accounts, subdivided into two parts: personal and impersonal. In personal, there is a three part: natural, artificial, and representative. In impersonal, there is a two types: real and nominal. And in real, it is subdivided into tangible account and intangible accounts. Okay, so first you are going to see about what are all the personal accounts, how to identify the personal accounts. Okay, personal accounts are the accounts that is recording the transactions related to the person or a group of persons, are called as the personal accounts. Okay, so these accounts are necessary to record the credit transactions, mainly related to the, keep in mind, when the person name is coming means, we already studied in the accounting equation now, that is it is the goods are sold on credit. On credit means, if on credit is not mentioned means, for example, if goods are sold to that is Padma, like that means, so only if it is, if it indicates for cash, it is called as a cash transaction. If it is not included, if it is indicates the name of the person in the transaction, it indicates the credit transaction. Okay, keep in mind. So if the person name is coming means, it is called as a credit transaction. Not the cash is not involved in the transaction, whether it is a purchase or sales. Understood? So it record the credit transaction. So the person name is coming means, it is called the credit transactions. Even if it is a credit sales, it is called as a debtors, or if it is a credit purchase, it is called as a creditors. Okay, so first one is the natural personal. Personal accounts are subdivided into three types. No, first one is the natural, artificial, and representative. First one is the natural personal accounts. That is, these accounts which relate to the individuals, which is mainly related to the individuals. Okay, recording transaction individual human beings is called as the natural personal account. That is Kamala account, Mala account, Sharma account. Okay, so next one is the artificial personal account. So these accounts mainly related to the group of persons or firms or institutions. Keep in mind, artificial personal account is the group of persons or firms or institutions. It is called as the artificial personal accounts. Last one is the representative personal accounts. It is mainly relating to the representing the person or persons, is known as the representative personal account. So these accounts represents the outstanding and prepaid items. For example, prepaid insurance and outstanding salaries, outstanding rent, outstanding wages. Okay, or the representative personal accounts. Okay, next one is the another one. See there, capital and drawing accounts are also the personal account. Keep in mind, capital and drawings are also called as the personal accounts. So for what purpose they are considered as the personal, we have to know the reason, no, why these capital and drawings are considered as personal accounts. So see the reason, when the person start the business, he is the proprietor. Okay, so the proprietor is represented, so the proprietor is investing certain amount into the business, no, so only by it, he is represented only by the amount of capital which is investing into the business. So capital account is the amount which is invested by a person, so it is coming under the personal account. Understood? So like that, the drawings account is also considered as a person, because he withdraw the amount. So he means one of the person means he may be the owner or the representative of the owners. He is withdrawing the amount from the business. So only capital and drawings are coming under the personal accounts. Understood? Okay, so the business concern may keep the business relations with the above personal accounts because of buying the goods from them or selling them or borrowing from them or lending to them. So they become either debtors or creditors. Understood? Debtors means selling the goods on credit, Creditor means purchasing the goods on credit. Okay, so next you are going to see some of the rules for the personal accounts. Debit the receiver, credit the giver. This is the first rule. When you are going to listen this explanation, you have take your note and write as the hint. What are all the important points I'm saying? No, yeah, just you write as a hint. Okay, so rules for personal account. First one is the debit the receiver, credit the giver. Debit the receiver, credit the giver under the personal accounts. This is the first rule. And next one is the impersonal accounts. In impersonal accounts is divided into two types. No, first one is the real accounts and the nominal accounts. In the real accounts, it is subdivided into two types. That is a tangible real account and intangible real accounts. So the real accounts are the accounts which is related to the properties and the assets which are owned by the business concern. Keep in mind, real accounts are the accounts which is related to the properties and assets. For example, land, building, etc. Okay, so separate account is maintained for each type of an asset, and also the real account is divided into two types: tangible real accounts. So commonly real accounts is mainly deal with the properties and assets, and the real account is divided into two types: tangible real accounts and intangible real accounts. The tangible real accounts are also the accounts which is represent the assets and the properties, but which can be seen and touched. That is machinery account, cash, furniture, stock. These are all the tangible which can be seen and touched. But intangible real accounts or the accounts, it also represents the assets and properties which cannot be seen and touched or felt, but they can be measured only in the terms of the money value. Keep in mind, it's very important. Okay, but it is only measured in the terms of money value. That is, for example, goodwill. These are all the very important examples of intangible real accounts. That is a goodwill, patent account. They are giving we can't able to see the goodwill account, but we can able to fix the value on the basis of the profit of the business concern. And you already know trademark, patent right, copyright. So these are all the license which is provided by the government to the business concern in order to carry out their manufacturing activities. No, so these are all the intangible real accounts. Okay, so next rule. So for the personal account, the rule is debit the receiver, credit the giver, and the rule for the real account is debit what comes in, credit what goes out. So you have to read the transaction and you have to analyze the transaction and you have to find what are all the two type of accounts involved in the transaction, and if it is next step is whether it is the personal account or real account. Okay, and in the real account whether it is a tangible or intangible. Likewise, you have to classify and you have to analyze whether there is a receiver or creditor. If it is a personal account, definitely you have to apply the rule debit the receiver, credit the giver. And if it is a real account, you have to apply the rule debit what comes in, credit what goes out. Okay, simple, but if you understand the concept, it's a very simple one. The next one is the nominal account. Third one is the nominal account. So the nominal accounts do not have any physical existence, forms or shape, but it mainly related to the incomes, expenses, gain, losses of a business concern. Keep in mind, nominal account. So personal account is mainly related to the persons. Okay, real account is mainly related to the properties and assets, and nominal account is mainly related to the incomes or gains, expenses or losses. Okay, so there is a separate accounts to be maintained for each head, like the expenses, losses, gains. For example, wages account. Wages is one of the expenses. Rent account. Rent is also one of the expenses. Commission may be in the form of, it may be, if it is a commission paid, it is expenses. If it is a commission received, it is the income. Okay, so interest received account. Interest received is the income. So these are some of the examples of nominal account. Okay, So there are two types of account in the nominal account. One is the revenue account, next one is the expenses account. Revenue account is also called as the income or gain. Expenses account is also called as the loss. Okay, so what is the rule for the nominal account? Debit all the expenses and losses, credit all incomes and gains. Okay, this is the rule. So these are the three important accounts. First one is the personal account, mainly related to the persons. And what is the rule? Debit the receiver, credit the giver. Second one is the impersonal. Second one is the impersonal account. In the impersonal account, first one is the real account. In the real account, it is basically related to the properties and asset. Basic rule for the real account is debit what comes in, credit what goes out. And next one is the nominal account. It is also the impersonal account. Nominal account is also coming under the heading impersonal accounts. Okay, so because these accounts are not related to the person, so only it is called as the impersonal account. Real account and nominal accounts are coming under the heading impersonal accounts. So nominal account is basically related to the incomes or gains and expenses or losses. Okay, so there is a two type of accounts maintained under the nominal account. One is the revenue account, next one is the expenses account. And rules for the nominal account is debit all the expenses and losses, credit all the incomes and gains. Understood? So this is the basic one. Okay, so see the golden rules. This is the basic golden rules. Golden, if anyone is asking, tell me the golden rules of accounting, you should be as an account students, we should have a thorough knowledge of the basic knowledge. Basic knowledge is the main thing for any type of subject, or for any subject the basic is the main, and it is only having the thorough basic knowledge we can able to develop our knowledge to the next extent. Okay, so be thorough in that the basic knowledge. So what is the golden rule of accounting? See the tablet column. First one is the nature of account, next one is account to be debited, next one is the account to be credited. First one is the personal account, debit the receiver, credit the giver. Next one is the real account, debit what comes in, credit what goes out. Third one is the nominal account, debit all the expenses and losses, credit all the incomes and gains. Okay, so be thorough in that. Next we will start the problem sum. See the problem 1. Classify the following items into the personal, real and nominal accounts. Okay, so if you are thorough in this classification, that is studying the theory, and we are going to applying the theory in the problem. Okay, now we finish the theory part. So in the accounts, theory part is very, very important. Only by analyzing and understanding the theory part, we can able to apply the theory part in the problem sum. Keep in mind. Okay, so we are going to apply the theory part in the problem. Now we are going to start to apply the theory part in the problem sum. Okay, so see the first one, capital. By seeing, you have to identify. Just by seeing, you should be thorough to identify the account, whether it is a personal or real or nominal. Understood? Capital is the personal. You already explained the capital drawings are personal. Sales means the amount is coming inside. Okay, so there is the income is the nominal. Drawings, I already explained, capital drawings related to the proprietor, so it is a person is related to that account, so it is the personal account. Outstanding salary is coming under the personal account. I already explained, no? Outstanding salaries. In which heading? Representative personal account. Okay, outstanding salary is coming under the representative personal account. So it is also one of the personal account, no? So outstanding salary is also the personal account. Okay, understood? Next one is cash. Cash is the real account because related to the properties and assets, no? So it is a real account. Okay, Next one is the rent. Rent is either it may be a income or expenses, but it is a nominal account. Interest paid. Paid means expenses, so nominal. Indian Bank. Indian Bank is the personal account. Okay, Indian Bank is the personal account. So see the theory part. That is in a personal account. See the second one, artificial personal account. An artificial personal account, some of the examples are given: firm account, limited companies account, educational institution accounts, cooperative society account, Indian Overseas Bank, life insurance corporation, like that. So all the banks and financial institutions are coming under the artificial personal, because on behalf of the persons they are carrying the financial activities, that is depositing. For each person there is an account in the bank, no? So on behalf of the human persons they are carrying the activities, that is the transactions on all the debit credit, all the transactions are carried only on behalf of the person. So it is called as the artificial personal account. So it is also one of the personal account. So it is called Indian Bank is coming under the personal account. Okay. Discount received. Received means income, so it is a nominal. Building is an asset. Property or asset is a real. Bank is a personal. Chandrasekhar, name of the person, so personal. Murugan leading library, it is one of the artificial personal account, so personal. Advertisement, it is one of the expenses, nominal. Purchases means the amount is going outside, it is one of the expenses, so it is nominal. Understood? So next one is, see the second sum. Now we are going to apply the rule. In the first sum we identify the type of account. So in the second sum we are going to applying the rule. Okay. So state the type of account and show which account will be debited and credited in the case of following transactions. Okay. So the first one is cash withdrawn. Cash withdrawn is the, see that for each one there is a 6 type of transactions, no? First one is the cash withdrawn, capital introduced, building purchased, goods sold, rent paid, interest received. And each type of transactions they are asked to identify the type of account, okay, and whether this account is debited or credited, and you have to apply the rule also. So see the first one, cash withdrawn. I already explained, no? Cash withdrawn means it is called as a drawings. So the account is drawing. And next column is type of account. What is the type of account? Drawing is the personal account. We already know. What is the type of transactions? That is the withdrawn. So what is the nature? So we have to write that. Nature is cash withdrawn means what is the that is the nature. It is a receiver. So what is the effect of the transaction? What is the effect of the transaction? So it is a personal account. So what is the rule? Debit the receiver, credit the giver. So receiver, apply the rule. The amount is coming inside. So only we are writing in nature receiver. Okay, receiver. So as per the personal account, what is the rule? Debit the receiver. So the receiver we have to debit. So only what is the effect of transaction? Debited. Understood? So see the second one, capital introduced. Capital is a account. What is the type of account? It is also the personal. And what is the type of transaction? Introduced. Introduced means the amount is going inside into the business. So what is the nature? Giver. Capital introduced means giver. So because it is given by the certain person into the business. So it is a personal account. You have to think the rule. What is the rule? Debit the receiver, credit the giver. So the giver we have to credit. So only effect is credited. Understood? Next one is building purchased. Building is a property. So it is the real account. So what is the type of transaction? Purchased. So what is the nature? Building purchase means building is coming inside. Comes in. Now apply the rule. If it is a real account, what is the rule? Debit what comes in, credit what goes out. Here the effect is coming inside. So the building should be debited. Understood? Next one is goods sold. Sold means, so the type of transaction account is sales. Goods sold means sales. Goods purchased means purchases. Okay, sales. So sales means the amount is coming inside. So it is a nominal account. Goods means it is an asset. So asset or property. So automatically type of account is nominal. What is the type of transaction? Sold. Okay. So what is, if it is goods are sold, so the goods will be goes out. Understood? Goods are going outside. Okay, going outside. Goods sold means goods are going out. So nature is goes out. Now apply the rule. What is the rule for nominal account? Debit all the expenses and losses, credit all the incomes and gains. Okay, so sold, the goods are going outside and the amount is coming inside. Okay, so debit all the expenses and losses, credit all the incomes and gains. Goods is going outside. Instead of goods, we are receiving the amount, so we are credited the amount. Okay, so next one is rent paid. Rent paid means it is the expenses. Rent is the is one of the expenses, so it is a nominal account. Transaction is paid. Paid means it is the expenses, so nature is expenses. Now apply the rule in nominal, debit all the expenses and losses, so we should be debited. Last one is the interest received. Received is nothing but the income. Income is coming under the nominal account. So type of account is nominal, transaction is received, so the nature is income. So apply the rule, debit all the expenses and losses, credit all the income and gain, so the account should be credited. Okay, it's very easy. Okay, so next one is accounting equation approaches. So we already studied modern approaches, that is classified into 5. All the accounts are classified into 5 categories under this approach. First one is assets account, capital account, liabilities account, revenue or incomes account, expenses or losses account. Okay, so next we have to know, that is if there is an increase or decrease in one account, there will be an equal increase or decrease in another account. This we already studied. So if there is increase or decrease in one account, there will be increase or decrease in another account. So some of the rules of debit and credit in various categories of accounts. So there is a 5 categories of accounts. So each account there is a certain rules of debit and credit. Understood? So first one is the asset account. See that increase in the amount of asset is recorded in the because asset is the, keep in mind, asset account is already studied. Asset account is a debit balance, and if there is increase in the amount of the asset, okay, so it is recorded in the debit side. Understood? Because the amount of the asset is increasing, already the asset is a debit balance. Now the value of the asset is increasing, so automatically the debit balance will also be increased. So if the increase in the amount of the asset account is recorded on the debit side, and if there is decrease in the amount of the asset account is recorded on the opposite, that is the credit side. Understood? Understood? So see the asset account. In the asset account there is a two side, debit, here credit. In debit, increase in asset is recorded on this side because asset is the debit balance, keep in mind. On credit side, decrease in asset. This is the rule. Okay, next one is the capital account. Capital account is the increase in amount of capital is recorded. Capital account is the liability, it is the credit balance. Keep in mind, capital account is the credit balance. Okay, so because the capital is recorded on the debit side. If there is an increase in capital, so it automatically there will be increase in amount in the credit side. Okay, so if there is a decrease in capital, it should be recorded on the debit side, just opposite to the asset account. So capital account is a credit balance and there is any increase in the amount in the capital account, it should be credited. So you have to know what type of account. Each account you have to know whether it is a debit balance or credit balance. Asset is a debit balance, so if there is any increase in the amount of asset account, it should be debited, and if there is any decrease in the value of the asset, it should be credited. Likewise, in capital account is a credit balance, so if there is any increase in the amount of capital, it should be credited, and if there is any decrease in the value of capital account, it should be debited. Likewise, liabilities account. Liabilities is also a credit balance. So if there is any increase in the value of liability, it should be credited, and if there is any decrease in value of liability, it should be debited. It should be recorded on the debit side. Next one, revenue or income accounts. Revenue or income or the credit balance, because revenue or income is a nominal account. You have to apply the rule. What is the rule? Income and expense. Income is the nominal account. What is the rule for the nominal account? Debit all the expenses, credit all the incomes. So income and revenue are the credit balance. Okay, for each you have to apply the rule. By applying the rule, you have to analyze what type of account. So you have to see whether it is a nominal or real or personal, and you have to apply the rule. That is, here the revenue or income is the nominal, and you have to apply the rule. Nominal, debit all the expenses, credit all the income. So income is a credit. Okay, so if there is any, so revenue or income is a credit balance. So if there is any increase in the value of income, it should be credited, and if there is any decrease in the value of income, it should be debited. Okay, and next, expense or losses. Expense or losses is also the nominal account. Apply the rule, debit all the expenses and losses. So expenses and losses is a debit balance, and if there is any increase in the value of expenses and losses, it should be debited and recorded on the debit side, and if there is any decrease in the value of the expenses and losses, it should be credited. Okay, increase in the expenses or losses is a debit all the expenses and losses. Okay, if there is increase in the value of expenses or losses, it should be debited on the debit side, and if there is any decrease in the value of expenses and losses, it should be recorded on the credit side. Understood? That's all. So very easy. Okay, so these rules may be summarized like this. It is, increase in asset is debited. Understood? Because asset is a debit balance. So increase in asset is debited and decrease in asset is credit. No, don't memorize these rules. Okay, understood the concept is the main one. Capital is a credit balance. So increase means it should also be credited, but decrease means it should be debited. Liability is a credit balance. So increase means it should be credited and decrease means it should be debited. Incomes and gains is a credit balance, and if there is increase in amount, it should be credited, and decrease means it is debited. Expenses, losses, this is a debit balance. So if there is increase in value, it should be debited, and if there is decrease in value, it should be credited. Understood? It's very easy. So next, see the third sum. So see the tablet column, nature of account, debit, credit. Asset, increase, decrease. Liability, credit balance, so increase, debit, decrease. Capital is a credit balance, so increase is credit, decrease in debit. Revenue is the credit balance, so it should be increase in credit, decrease in debit. Expenses is a debit balance, so increase in debit, decrease in credit. Okay, so see the third sum. On what side increase in the following accounts will be recorded? Increase, they are asking the increase only, not the decrease. Okay, so the first you see cash. Cash is the asset. Okay, cash is the asset. Second one is machinery. Machinery is also the asset. It should be debited. Third one, debtors. Debtors is also the asset, so it should be debited because they are asking the increase. If it is, if there is the increase in the value of each item, where you have to record. This is the question. On which side it should be recorded? This is the question. So first you have to identify whether it is assets or liability or revenue or income. Okay, and you have to see they are asking the question. It is only the increase. Okay, so if it is a debit balance, it should be debited. If it is a credit balance, it should be credited. Understood? But we have to identify what type of account it is, whether it is asset account or liability or revenue or income or expenses and losses. See the first one, cash. Cash is the asset because it is a real account. Okay, so asset. Asset. So asset is a debit balance. So it should be debited. Second, machinery is also the asset. No, that is the real account. So it should be debited. Debtors also the asset, so it should be debited. Creditors. Creditors is a liability. Credit balance. Creditor is a liability. It is a credit balance, so it should be credited. Next one is the bank OD. Bank OD is also the liabilities, and liabilities are the credit balance. Assets are fully debit balance, and liabilities are fully credit balance. So bank OD is the liability, so it should be credited. Capital. Capital is already I told, no, it is also the capital is a personal account and it should be credited. Okay, this should be credited. Next one is the interest received. Received means revenue or income. Okay, as per the rule, interest received is the income, so it is coming under the nominal account. Apply the rule, debit all the expenses, credit all the income. Income should be credited, so it should be credited. Understood? Salaries paid. Paid is the expenses. So apply the rule, it is coming under the nominal account. Debit all the expenses, so it should be debited. It's very easy. See the fourth problem. On what side decrease in the following accounts will be recorded? Decrease. Now we studied about the increase, so no changes will be appear as per the rules. As per the rules, we are doing that, but decrease means is opposite to the rule. See the first one. See the first one, furniture. Furniture is the asset. Furniture is the asset, but it is asset is a debit, but it is decrease in value, no, so we are credited. Understood? Next one is the outstanding salary. We already told, no, outstanding salary is coming under the personal, that is artificial personal account. Understood? Artificial personal account. So it is one of the liability. Outstanding salary is one of the liability. Because why it is called as a liability? Still not yet paid. Outstanding means still not. I already explained. Outstanding expenses and prepaid income are the liability, and outstanding income and prepaid expenses are the asset. So here salaries is paid by the business concern to the employees. So it is one of the expenses to the business concern. So it is one of outstanding is the expenses. Outstanding means still not yet paid. So it is coming under the liability. Liability is a credit balance. But here if there is a decrease in value means automatically we are doing the opposite. So we will be debited. Understood? Third one, capital. Capital is a personal account and capital is a credit balance. It is a liability, it's a credit balance, but here decrease, but we have to do the opposite. We should be debited. See the fourth one, prepaid expenses. I already told, no, prepaid expenses is the income. Sorry, it is an asset. Prepaid expenses is an asset. Okay, so asset is a debit balance, but here there is a decrease in value, so we are credited. Next one is the machinery. Machinery is the asset. Okay, so asset, but here is a decrease in value. The asset is a debit balance, but decrease in value, so we are credited. Understood? Next one is the prepaid wages. Prepaid wages is also the, what is that? Prepaid means wages is one of the expenses. So prepaid wages is an asset. Asset is a debit balance, but here decrease, so we are credited. Next one is the cash. Cash is one of the asset. Asset is a debit balance, but it is a decreased value, so we are credited. Next one is a Mohan, a debtor. Debtor is an asset. Asset is a debit balance, but here decrease in value, so we are credited. Understood? So very simple. Okay. So see the fifth problem. So the fifth problem they asked to prepare the cash account. What is the changes? But still we are not started to study the journal entry, ledger accounts. But we can't able to do this fifth problem, because only after having the thorough knowledge of preparing the journal entries and ledger accounts we can able to study about the cash account. It is how to prepare the account. So now we can't able to do this fifth problem. Okay. So but you can do the sixth problem. Sixth problem is they are given some of the transactions. 8 transactions is given, and they asked to show the analysis table. Analysis table means you have to see, that is what type of aspect is in each transaction, what are the two type of accounts is involved, what is the type of account, what is the rule, and what account is debited and what account is credited. Likewise you have to analyze the each transaction. Okay. So see the first one. Mr. Sudhir started business with cash 10,000. Okay. So see the, put the columns: transaction, dual aspect, two account, type of account, rule, debit, credit. This is the transaction analysis table. Okay. So first one is the started business with cash. So dual aspect means cash is coming inside and Sudhir is giver. Understood? So what is the two type of account? There is the cash is one account and Sudhir is the one account. Two type of cash. Two type of accounts are cash account, and Sudhir is giving the amount of, is investing the amount. It is called as a capital. So what are the two types of account involved in this transaction? First one is the cash account, another one is the capital account. So what is the type of account? We already studied. Cash account is coming under the real account. It is the two type of real, no, tangible real account. So it is one of a real account. Capital account is a personal account. Okay. So real account, you have to know the rule. What is the rule? In real account, debit what comes in, credit what goes out. So here the cash is coming in, so debit what comes in. Okay. In personal account, apply the rule: debit the receiver, credit the giver. So credit the giver. So who is the giver? Sudhir. So see the debit balance 10,000, credit 10,000. So what will be the journal entry? This is the way of analyzing the table, and we have next step is next next we will study the journal entry. So what, just understand how to write the journal entry. After analyzing this we will write the journal entry. So what is the debit? Debit what comes in, cash is coming inside the business, so we have to debit cash account debtor to Sudhir account. Sudhir account is debit, credit the giver. Understood? So debit what comes in is a real account, we are applying the rule, and is capital account is a personal account, so we are applying the personal account rule: debit the receiver, credit the giver. Understood? So see the next one. Goods purchased for cash. Goods purchased for cash. So what is coming inside goods? What is going outside cash? So goods coming in means, what is mean by So there is a two type of accounts involved. What is the type of accounts? The name of the account is purchase account and cash account. So we have to next one is the type of account. Purchase account is the, why it is called as a nominal account? Because purchase means that is one of the expenses, because goods is coming inside but the amount is going outside, so it is one of the expenses. So expenses and expenses losses is that nominal account, so it is a nominal account. Cash account is the real account. So first you have to apply the nominal account rule. What is the rule for the nominal account? Debit all the expenses. So debit all the expenses. Real account, what is the rule for real account? Debit what comes in, credit what goes out. So credit what goes out. So debit 16,000 value of the goods is coming inside and 16,000 of cash is going outside. Understood? So like this you have to analyze the each type of transactions. So that is the 8 transaction. I explained the 2 type of transactions and you have to read and analyze the other transaction. Understood? So next one is the advantages and disadvantages. We already studied what are all the advantages of double entry system and the disadvantages of double entry system. Okay, so theory part. So next one is there is a solved NCERT problems. So okay, so read the question. So very easy, do by yourself, but here the solutions is also attached by do by yourself. Okay, for each sum you have to do by yourself, and if you are having any doubt, we can discuss. Okay. So up to the third sum you can able to do, and fifth sum, no need to do the fourth sum. Okay, so 1, 2, 3 and 5. And study the hard question, the high order thinking skills. It's from this high order thinking and evaluations, value based questions only. Lot of questions are asking in the question paper, so be thorough in that high order hard questions and value based questions. And in this chapter they also attached the assess yourself. There is a multiple choice questions and question answer. That is it includes the take the practical questions, and it includes question answer with the answers. That is one mark answer they include answer, but a short answer type and long answer type you have to refer the book and you have to mark the answers and you have to study. Okay, and in practical questions there is 12 problems. Okay, so they are included the answers too, so it is very easy to do the problems. So there is a 12 problems in this chapter. Okay, so try to do all the sums, because all the sums we are same model only. Just you have only that is, if you are thorough in that theory part, it is very easy, and the solutions are also included. So you have to complete all the sums. Okay, so in the illustration sums there is 2 to 3 problems, no? So first you do before starting to do the problem, first you put the heading double entry system, write the rules. First you have to write the rules for each account. Type of account, personal account, there is a 3 type: natural personal account, artificial. So in natural personal account write the examples, it's enough. And artificial personal account write some of the examples, and representative personal account write some of the examples and write the rule. Likewise you have to do for the impersonal account and for the nominal account, and write the golden rule of accounting, and then start to do the problem 1, problem 2, problem 3, problem 4. No need to write the problem 5 in the illustrations. And in the practical problems we have to do all the 12 problems. Okay, so same model only. Okay, so do all the problems and complete it in your classwork note. Okay, so next class we will start the next chapter, that is how to prepare a vouchers. Okay, so do all the problems, and if you are having any doubt I will clarify the doubt. Okay. Thank you, students.